Guys, welcome to this presentation, and I do just want to give a bit of a round of applause to everyone else that has already presented today and the future events. There is going to be a ton of knowledge you will get from these events. So the fact that you guys are here, you've made it till 7 p.m. tonight, and around the world, probably different times. It may be very early in the morning for you as well. So yeah, really, really give yourself a round of applause for being here. You are investing in your future. Now, this presentation, guys, is called Leap Your Way into Maximum Profit. Now, there is a little bit of a reason why I say leap your way, because we will be talking about option leaps. Now, small disclaimer, guys, options do take substantial risks. This webinar is purely for educational purposes only, and you should not spend or invest money that you cannot afford to lose. A little bit about me. I'm the co-founder and CEO of Real Life Trading Australia. I've been investing in the stock market for about 7 years. Prior to that, I was a qualified electrician for 10 years, and I worked in the mining game. Now, guys, those of you who don't know much about mining, it's a pretty tough gig. You're working 12-hour days, you're away from your friends, you're away from your family. And I really just didn't have that much time, and I was always looking for a better way to make money, get more time, and spend more time with my friends. And being in the mines just was not helping. Although you get paid a lot of money, time is much more valuable than money. We all know that time is our greatest commodity in life. We can always get money back, but we can't get our time back. So on that note, guys, I ended up going into my own trading journey. I've been trading for I've been trading for about 7 years. I worked in this, I've been trading as a full-time trader for the last 4 years, and I've helped coach and interacted with many, many thousands of people all around Australia and around the world, through platforms like YouTube and our real life trading community as well. I was also coached and mentored by the greatest stock market educator in the planet, Jeremy Alexander Newsom. He is the CEO of Real Life Trading in the US. You guys have probably had him on the show here before. But in and amongst the real life trading community, I am known as Australia's #1 options trader in RLT. Now, this particular presentation, guys, how is this going to change your life? It's changed mine because it gave me the freedom and the choices to do whatever I want to do in life now. It'll also create you an extra source of income. Maybe you need some credit card repayments. It'll help you save for another investment property if that's your thing. It'll help you pay off bills. But most importantly, guys, it's going to invest in your future. You are investing in yourself today, and this will pay dividends in the future for your friends and family. Now, why should you listen to me? Well, number one, this presentation is entirely free, and I'm going to give you a new skill that you can literally take away today and start making money tomorrow. The reason I say you're going to be able to take this away and start tomorrow is because I'm actually going to give you the entire strategy for free. So really exciting. I'll leave it till the end. But guys, our mission at Real Life Trading, if you haven't heard before, it is to enrich lives. So please let me know if I do this for you after the presentation has completed. The things that I do want you guys to focus on and know is that trading is not for the faint-hearted. It does carry risk, although it can be managed safely, which we will be speaking about today. I won't just be talking about how much money you can make, but I'll be talking about how to manage that risk as well. Key thing with options, guys, you do not want to over leverage yourself. We have free courses on our website. That's right, free courses on our website. You can learn all about this stuff on our website, which I'll give to you guys at the end as well. And before you guys get into this with paper trade, with real money, make sure you guys practice with paper money first and understand how this all works. Because when you first dive into the world of options, it is a little bit daunting and a little bit scary and a little bit confusing. But trust me when I say this, you know, when you get some coaching by me, I'll be able to help you overcome all those fears and trade with complete ease. Now, a few myths and traps, guys. Type in a 7 if you guys have heard that trading is gambling. I hear this all the time, and I have to completely disagree. The only reason why is because when you're at a blackjack table and you put your money out on the table, if you get dealt the wrong cards, you can't say, "Oh, sorry, I want half my money back because you gave me the wrong cards." Right? That once the money's on the table, it's gambling. Right? You're done. You can't take that back. Whereas with trading, if a trade is not working in your favor, you can always retract your trade and maybe take a small loss, or maybe even just a very small minute gain. So that's the difference. In my opinion, trading is definitely not gambling. You also don't need tens of thousands of dollars, and that will be evident today when I do give you this particular strategy. You guys have probably also heard that 90% of traders lose money. Guys, 90% of people lose at anything. 90% of people are really bad at singing. I'm a really bad singer. 90% of people can't play football, right? There are 10% of people that can, but there's only 1% of professionals, which you guys here all are, that actually have an edge and do the work consistently and consistently make money in the markets. So there's just a few myths and traps. I believe that the statistics are kind of skewed. But for tonight's presentation, guys, are you ready? Type in a 7 if you guys are ready for this particular leaps strategy. Nick's ready, Vicky's ready, Moses is ready. He's got 5 7s. All right, Mose, this one's for you. Now, guys, the objective of this particular presentation is, if you haven't traded options before, I am going to go into a little bit of, you know, theory and definitions first. And then I'll dive into the good stuff. It won't take long. But first of all, we are going to talk about what stock options are. Then I'll talk about what are leaps and what are the benefits of leaps. And then I'm going to actually give you my strategy, which is just 10 key steps to identifying leaps opportunities. Here we go. Now, the theories and definitions, guys. Now, what is a stock option? A stock option is simply just a contract that gives an investor a right, but not the obligation to buy or sell at an agreed upon price, which is known as the strike price. Now, like all contracts, guys, whether it's a house or a car contract, they all have an expiration date. There are two different types of call options. There are two different types of options. There are call options and there are put options, right? You've probably heard if you buy a call option, you make money, right? You can also sell a put option and make money, right? Or you can buy a put option and make money. Now, call options increase as the price of the stock rises, and put options increase as the price of the stock falls. The strike price is the agreed upon price at which which both the parties are agreeing to buy or sell the price, which I mentioned before. And the expiration date is just simply when the contract will expire. Pretty simple stuff. Now, unlike normal shares and options, like with options contracts, when you're dealing with one contract, it is actually controlling 100 shares. So for example, if you buy 5 contracts, you are controlling 500 shares, and the premium is multiplied by 500. So here's a small example. If the option price was $1.60, the contract would actually cost you $160. If you bought 5 contracts, it would cost you $800. Now, what this whole presentation is about is LEAPS. Now, LEAPS is an acronym. It stands for Long-Term Equity Anticipation Securities. right? They are publicly traded options contracts which have an expiration date that are longer than 9 months, and in some instances can be up to 3 years from the issue. These option contracts, guys, these option contracts, whether you buy the option or you sell the option, they can mean whether you are bullish on the stock or bearish on the stock. So for example, when you hear the term call option, most people think bullish, right? But when you buy a call option, it is bullish. However, if you sell a call option, you are somewhat bearish on the stock. And the reverse goes for a put option. When you buy a put option, you are bearish on the position. You make money as the stock goes down. However, if you sell a put option, it is the option to buy the shares. So you are actually long the stock. So you really need to understand that when you are trading options, that both call options and put options can be used for both bearish and bullish positions, depending on how that contract is open. And it is very, very important, because if you sell options, it does require what is called margin. Now, what's the difference between options and shares? Well, you guys have, from the other presentations that have already gone, you guys know that when you are trading shares, you can use a lot of capital, right? With options, they are a smaller capital outlay, especially when you're buying options. There are different option strategies or hedging strategies that you can use with options. With options, you actually have, there's an absence of the stock owner's rights, aka like voting and dividends, but it also gives you leverage, which means you don't have to have tens of thousands of dollars, guys, to make money trading options. You can have a smaller account, as options are cheaper. Now for the good stuff. This is what you guys have been waiting for, right? This particular strategy that I'm going to give you, the trading style is a longer term approach. Now, the reason why you want to have a longer term approach is a lot of day traders do lose money, right? A lot of day traders do lose money. Whereas when you're investing in a particular stock, you're not really worried about what's happening day to day, right? So this particular strategy, if you're a homeowner or you just like to buy and hold shares, this will be a strategy that you will not want to miss. It's going to be something that you're probably going to reach out to me and ask for more information about. You're probably going to reach out for a coaching session to take you through how to do it as well. But this is really going to target those sorts of investors or traders. For this one specifically, guys, I do trade US options. I'm not sure where most of you are in the world. Some of you are probably in the US, probably in the UK. I'm from Australia, and I use US options simply because of the liquidity factor and the great global companies that the US does have. It is mainly a technical analysis model strategy, right? Not many fundamentals are used in this particular strategy, and the trading horizon is weeks to months. Now, those of you who are thinking, oh, but I want to make money, I want to make $10,000 by next Tuesday, that's okay, all right? However, patience pays in the markets, right? You want to become a specialist in the market, right? The market rewards the specialist. This trading horizon, although it's weeks to months, you can literally make tens of thousands of dollars, but not be sitting in front of a computer screen, right? You do want to still have your time, right? You can still do this while you're working full time. This could be your side hustle sort of gig as well. So without further ado, guys, let's start. This is the strategy. I'm going to give it to you for free. The 10 key steps. Now, this is just a very small checklist, right? So take a screenshot of this if you will, and you can go and back test this using your trading platform or your broker. But the first rule of this particular strategy is you need to identify if the stock is in is in an uptrend on a weekly chart. Sounds kind of simple. Sounds kind of simple, right? Is the stock going from bottom left hand to right hand to the top right hand corner? Number two, has the stock had a 20 to 30% pullback from the recent highs? Now, this is because we do not really want to be buying the stock at an all-time high. Most stocks retrace after they do hit all-time highs, right? You probably hear a lot of people saying, buy the breakout, you know, you'll make lots of money. Okay, well, that happens, but then probably a week later, it'll trade higher and then it'll fall back down. And then, you know, as soon as you start to see red in your P&L, you end up selling for a very small loss, only for the trade to turn around and go in your favor, right? It's a very frustrating thing. Now, having a stock pulling back 20 to 30%, right? Remember, because this is a long-term strategy, we want to have a longer-term approach and think, okay, well, I don't want to be buying and worrying about, you know, the 2% movements during the last week, right? I want to be buying this and waiting for, say, 10 months, 12 months, 16, 18 months, right? Because I want to be making sure I'm buying this stock at a discount, right? And buying at a 20 to 30% pullback from the recent highs. If you go back and look at a chart, have a look where the stock tends to retrace back and start reversing back to the highs. It's usually 20 to 30%. If it pulls back further than that, generally a stock will not pull much further than 50 to 70%. 70% is a pretty round number that is usually the quote unquote bottom of a stock, especially if it is a high growth company. Now, number three, you need to know if the stock is bouncing off any longer term supports. Now, longer term supports can be your 100 or 200 day simple moving averages on a weekly or a daily chart. Most of you would know what this looks like, so I won't take a screenshot and show you guys. Number four is, has the stock had an above average volume in the last month, right? If the market is looking to reverse, if the market has been falling or we're trending lower, usually the volume is pretty consistent, right? But if the market is going to show some volatility and trying to find, I guess, balance, right? The volume is going to start picking up. Now, if the volume is going to start, if your average volume is going to, sorry, if the stock is trading above the average volume in the last month, it should be on your watch list, especially if it is a long-term key level support. And another thing is you want to make sure that the stock has created a higher high and a higher low in the previous month, or in the most previous month. Now, the reason for this is because a trend can continue even if it is creating lower lows and lower highs, right? Although it might be at a support level, if it bounces and all it has done is create another lower high, it can very easily continue to the downside. So just keep that in mind, guys. Wait for the volume to come in, wait for the higher lows to come in, and you'll have a little bit more confirmation on that particular trade. Now, items through 6 through till 10, guys, the great news is these can actually be scanned for you using a tool called FinViz. It is entirely free. You can go to www.finviz.com if you guys want to check this out. But in your screener, number 6 is you want the stock to be trading above the 200-day simple moving average. Why? Because over the 200 days, you want to make sure that we're staying above a longer term price point, right? A longer term trend and a longer term price point. If we're below the 200 simple day moving average, most likely the stock is going to trade sideways for, you know, probably about a couple of months whilst it builds pressure and consolidates, right? But it can still be at a low level. But remember, guys, this is just a checklist. We only need 7 out of 10 required for this particular strategy, right? You don't need to wait to get all 10 check marks. So if you don't get that one, but you get the rest, it's probably going to be okay, right? You don't want to have analysis paralysis and, you know, watch the trade go in your favor and say, I woulda, shoulda, coulda done this if only, right? Here's a set of rules. You don't need every set of rule, right? Everything works in trading, just not all the time. Remember that. Number 7 is the RSI indicator is trading below 50. Now, this is a free indicator. It's on pretty much most trading platforms. I use it on TradingView. You want it to be trading below 50. Now, the reason being is because generally the opening settings are between 30 and 70, right? You do not want to be buying a stock when the RSI is at 70, right? Because most of the time it pulls back. But if the stock is trading below 50, but we are finding support, we're getting the higher lows, we're building pressure, and we can't, and we're failing to break lower, generally we will start to reverse. Now, this next one is a little bit more of fundamental base. Number 8 is the company's sales growth quarter on quarter greater than 20%? Now, the reason why you want it to be greater than 20% is because you want to make sure that the company is growing. Very, very simple. You can scan for this on FinViz, which is really, really great. Does the stock also have an average daily volume of more than 1 million shares? Now, before a couple of the presenters were talking about liquidity, right? You don't want to be trading stocks that are only having 50,000 shares traded, right? They might be at really big lows, but specifically for options, you want to be making sure that the liquidity is there for not just shares, but for options as well. And the next one, guys, is you want to make sure the stock is just trading above $20. Very, very simple. Now, what does this look like? So here is a little screenshot of FinViz, right? Here's a nice little scanner. And here's just a couple of the options that I've put in here. So you've got the price of over $20. And what you'll notice, guys, is have a look at the stocks. Can you see that we are trading from bottom hand left-hand corner to the top right-hand corner? Right? You can already see that we are uptrending. Right? So with this, we're now looking at the pullback. So the cool thing is, it's like, where is a really good, you don't have to spend 1,000 hours trying to find the right stock. This will do it for you, or at least it'll give you a short list to go through those particular rules, right? But a lot of these stocks are coming down to some long-term locations, right? You can see on Square, we're back down at the 200 simple moving average here, et cetera, et cetera. Here's a couple of examples, right? Meeting the requirements. So this is one on Square. This one was a little while ago. Obviously, Square is a lot higher now. But as you guys can see, are we in a weekly uptrend? And the answer is yes. We're going from bottom left to top right, right? You can see down here, the RSI is below 50. What you'll also notice, guys, is when we are up at around 70, right? You guys can see here on the RSI, the little oscillator below the chart. You guys can see that when we're around 70, we usually have some sort of pullback, right? So this is why we want to be looking at buying the stock at a discount. This is why we want to be buying low and selling high. You guys have probably heard that term before. The above average volume in the last month, as you guys can see here, our above average volume is also increasing as well. I'll just get this little tool out so you guys can see what I'm pointing at. So you got the above average volume here. We got a volume of over 1 million shares traded throughout the day as well. Also trading above $20, which is great. And what you'll note here, very, 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 very important, is the 20 to 30% pullback, right? And of course, the 200 simple day moving average as well. So that all looks really, really great. That's just one example. Next one is Twitter. So I'll go through these ones again for you guys. We are currently in a weekly uptrend, right? We've got the weekly uptrend, which is looking fantastic. Above average volume, it's ticking the box. RSI is below 50, right? We're currently trading at 43 on the RSI. Above the 200-day simple moving average. Stock is also above $20. And yet again, guys, we had a 20 to 30% pullback. The last 20% to 30% pullback we had, guys, was back here, right? And what happened? We came back down to a longer term moving average, the 100 simple moving average. We bounced, right? We came back to the highs and then we retraced. Now, if you were a breakout trader, which is what I was mentioning before, some people say buy the breakout. Well, this is where those traders would have been buying, right? This is where a lot of the newbies would come in and say, it's breaking out. It's a confirmation. This thing's going to $80, right? She's going to rocket higher. And what you notice is we end up having a pullback, right? The RSI is also extremely extended. So you don't want to be buying at those particular levels. At these levels, however, is where we are looking at accumulating and waiting to buy the dip, so to speak. And here's another example for you guys as well on AMD. Once again, all right, weekly uptrend, recent highs. We had the pullback. This time we only had a 22% pullback, which is, not too bad. Also above $20, which is great. We're getting the above average volume start to kick in. The RSI also below $50, actually trading around 39, and the volume is looking sensational. And what you'll also know is we are holding the 200 simple day moving average. All looks fantastic, right? Now, it's all good to go. Actually, I'll just go back to this quickly. As you guys can see here, we've got 1, 2, 3, 4, 5, 6, 7. This is only 7 out of 10. And every single one of these trades worked had you have done these particular trades, right? So don't be fooled. You don't have to get all 10. I just wanted to make that clear. Now, here at Real Life Trading, guys, we use what is called the R system, right? I'm not going to just sit here and tell you about how much money you can make, right? Because that's not the most important thing. You want to be able to stay in the game as well, right? You want to be able to mitigate your risk. Now, the R system is quite simple. 1 R is equal to 1% of your account. So for example, if you have a $50,000 account, you're only going to be risking $500, right? Practice this with paper money first until you understand how it works. If you only have a $10,000 account, your risk is only going to be $100, right? Very, 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 very small and very, very simple. So minimizing your risk, guys, I mentioned this before. You do not want to over leverage your account. Each position that you have in your account, so let's just say you have, say $50,000. Each position in your account should not take more than 10% of your total equity. So if you have 50 grand in equity, you shouldn't be spending more than $5,000 in total on one position, right? On one leap, right? You can scale into these, right? So let's just say your total position was, okay, I want to buy leaps for 18 months out, and I want to spend a total of 5 grand, right? But if your contract only costs, if one contract only costs you $1,200, well, you could buy one now, right? And then you could, if the stock continues to go either sideways or just not really go anywhere, right? Later on down the track, you can say, all right, well, I'll add to that position and I'll buy, more. Now, this is obviously just, it's not like a go-to rule. You don't have to spend the total 10%. This is just the maximum that you want to be spending on these particular positions, right? You don't want to over leverage, and you definitely don't want to put all your eggs in one basket. Don't risk more than 1 R per trade. Very, very simple, right? Have a stop loss exit and a strict exit at 1 R. Okay, if the trade is not going to work in your favor, you should find out pretty darn quick. So here is an example of just the trade execution. Right, I'm just going to look at this one on AMD for you guys. So very small example, right? This is based on a $50,000 account. if you have a $500 R, right back here, where's this little tool? Back here, the option when it was at around $29 to buy a leap on this particular stock, right? And we're talking about 9 months out, which means we're not waiting for, we're not going to be worried about what's happening next week, right? We're more so looking at this weeks to months, right? At this particular level, it was going to cost $3 to buy that particular option. Our stop loss, if you had a look at the option pricing chart, was down here at $2. And so we have $1 worth of risk. So this is the equation if you're trying to figure out how many contracts you should buy. If your risk is $500, right, you simply subtract your entry price, which was $3, minus your stop, and you have a $1 risk, right? $500 divided by $1 is equal to 5 contracts, right? Up in a 6 if you guys are following so far. I hope I'm not confusing anyone just yet. Perfect. Andrew, thank you. Dan, thank you very much. And Mose, legend. So here's just a small example, guys. This is how we would mitigate our risk, right? Next slide. Now, I spoke about how to mitigate risk. I spoke about how to place the particular trade. But Ricky, when do we take profits? That's probably when you're wondering. It's all well and good to have a plan to buy stocks at a low level, but when do we take profits? Now, a general rule of thumb I like to look for is a risk reward of 1 to 2 minimum, right? So if you are having a risk of $500, you want to be at least making or at least taking profits at least $1,000 profit, right? 2 to 1. Also, if the stock has had a sharp upward move of 30% rise in the stock price, right? Not the option price, in the stock price. That's another time that I would look to exit. Now, the 30% number, guys, it seems to be popping up quite a bit. Now, I'd urge you guys to just have a look at a chart, draw the, I guess the retracement tool, and have a look at how far a stock pulls back before it reverses, but also have a look at how far a stock will run before it actually pulls back after it's had a really nice bullish rally as well. Also, if the RSI is trading above 70, right? I mentioned that this was a really nice selling location or an overbought stage, right? Or you could simply just manually trail your stop below recent pivot levels on a daily chart, right? Very, very, very basic. So as you guys can see here, this was the original trade that we were speaking about, right? There was the stop limit buy at $3. Our stop was down here below at $2. As you guys can see here, the rise in this stock price was a 30% rise, right? So this is one where you'd be like looking at this and going, wow, okay, probably should take my profits off the table. Now, granted, this particular trade, although you had 9 months or 18 months for this trade, in this instance, it would have been 9 months for this particular trade to work out, it worked in your favor within a month, right? And this is really, really important to know, right? Because when the stock is trading sideways, right? Remember how before I mentioned that it wants to be creating higher highs and higher lows, right? When we're just trading sideways and we want to have the volume as well increasing, have a look what's happening here to the volume, right? We're not really going anywhere. Right, we're not really going anywhere at that particular point. We're just kind of ranging. In this particular instance, you would use a more non-directional strategy, but you wouldn't get into a longer term call option straight away unless you have a little bit more confirmation that, hang on a minute, there's volume creeping into the trade here and we're at a longer term support. So you can see here we had a 30% rise. Also, the RSI on this one was above 70 as well. In fact, it was at 77. So another really great time to take your profits. Now, before I mentioned that you could have gotten 5 contracts. You don't have to take all your profits at these highs, guys. You could simply just, if you had 5 contracts, you could sell 3 of them and let the rest run for the rest of the year, because out of those 3, they probably you'd probably find that they paid for the whole trade anyway. And then you would basically have a runner, right? In a sense, you would have a runner on the stock. But if you only have 1 contract, obviously you would be looking at taking your profits on this one. So here is the example or trade result from before. We had that original risk of $500. We got 5 contracts. Now, if we, so the result is that we bought the 5 contracts for $3, right? Which costed us a total of $1,500. When we were at the highs here, right? When we were at the highs here, the contract was worth $7. So we sold all 5 contracts for $7. Now remember, guys, this is a $4 gain, but it's $4 multiplied by 500, right? Because remember, 5 contracts is equal to 500 shares, right? So our profit is $4 per contract, right? Which is a $2,000 gain. And this is in less than a month. And it's only 1 position. Now, remember, guys, if you have more money, you're giving yourself more time, right? This is only 1 particular trade that you can spend money on, right? This was here. So on this one, this was actually quite conservative, because remember I said that if you have a $50,000 account, you could spend up to 10% on equity, right? 1,500 is not 10%. It's only 3% of equity, right? So you could have looked at this and gone, you know what? I'll either add to the position or I will go full 10%, right? If you went in with a full $5,000, right? The math behind that, you'll have to do it. It's $5,000. You would have, what's that? 10 contracts? No, more than 10 contracts, actually. Anyway, you'd have quite a few, but your profit would actually be closer to $10,000, right? Within a month, and you're only using 10% of your equity, and you have 9 months for the trade to work in your favor. So really, really conservative strategy, guys. Your risk to reward on this particular trade is a 1 to 4 in this instance, right? We made $2,000, we're only risking 500. So really, really cool stuff. Type in a 6 if you guys really, really loved that particular strategy. Want to see some 6s. Dan Mather, loved it. Vicky, thank you, thank you, thank you. I hope you guys took a screenshot of that particular strategy, because it's now gone. But you guys can also watch the recording. But guys, today I have got a special offer for you. I am going to give you for free, again, 2 free option strategies, and I'm going to give you a free dashboard. Now, if you haven't been to our real life trading website before, we do offer free education. We also have premium education and courses as well, but at our website, you will be able to learn anything from beginners, intermediate, advanced, even day trading and futures, all entirely for free. So go and check that out. Click on the link, check it out, sign up, create yourself a dashboard, go through, do these 2 free strategies. These 2 particular free strategies are passive income generators, guys. These will make you money while you sleep. So they are really, really great as well. Also, if you are in Australia, now you can be in the US as well. We do have swing trading floors in the US as well. But this one specifically, this one is for if you want to join our swing trading room in Australia. We have live webinars from 7 till 8 p.m. Australian Eastern Standard Time. Monday, Wednesday, and Friday evenings, where I give in-depth stock analysis, daily trade recommendations. You also get the video recaps via email, right? So if you can't be there, I actually do have a few traders from the US that join the swing trading floor, but they just watch the recordings. And the great thing is they get the recordings before the market opens, right? So it's usually the first thing they do. When they get up in the morning, they'll watch the swing trading floor, and then they'll place their trades. You'll also have access to our official swing trading log, and all these webinars are hosted by me. Now, we do have a few offers, right? We've got the basic bundle, right, which is just the afternoon swing trading floor, and you get a weekly options newsletter. So today I was talking about leaps, right? But this one is where I give out weekly recommendations or weekly option trades, right? You get a newsletter. You actually get 2 newsletters per week, right? You'll get one from the US and one from myself. It is $199 per month, but if you pay per year, you will save money, guys. It is only $1,999 per year. Now, this is in Australian dollars for all my US guys, so it may even be even cheaper for you guys. Go to reallifetrading.com.au if you want to join. If you want one-on-one coaching with me, I can take you through all these particular strategies and more. It is $1,000 per session, and trust me, it will be completely life-changing for you. However, we do have a premium bundle. Now, this is by far the most valuable bundle that we have. You will get the afternoon swing trading floor for 1 year, right? A whole year. You'll get 2 weekly options newsletters, and you'll get 2 bonus one-on-one coaching sessions, which is $2,000 worth of value. And it is only $29.97 per year. There is no monthly offer for this, simply because of the coaching sessions. But this is by far the most popular offer that we have available, guys. So if you want to be coached by me, if you want help to generate more wealth, if you want to grow a small account, I can teach you all the ways how to do that. If you've got a larger account, but you are a little bit more conservative, I've got strategies for you as well. If you've got a 401k or a superannuation, I've got particular strategies for that as well, right? We make money in up markets, down markets, and sideways markets as well. All phases of the market, I'll be able to teach you some sort of strategy that will help create a very nice, solid income for you guys. Now, if you want to get in contact with me, just text Friendsgiving to that mobile number right there, +61 428 208 962. That is a real number. It's my direct phone number. So send me a message. I'd love to hear from you guys. Or you can email me at ricky@reallifetrading.com. If you've got your phone handy and you don't want to type in our whole web address, you can scan that QR code as well. But make sure you sign up to one of our many free courses. Create yourself a free real life trading dashboard. Reach out to me if you do want to trade in the US swing trading floor as well. Send me an email, and I'll point you in the right direction for this as well. We've got day trading floors and swing trading floors as well. But definitely load up your custom dashboard with lots of free courses, tools, premiums, and high-end training. And we've got all free ebooks as well. So guys, thank you very much for being here. I know it's late. It's been a very, very big day. Thanks for having me here, David. And I really, really hope that you guys enjoyed this presentation.